Some of you guys on? I was just letting people come in the room here. All right. Can you guys see my text, my screen? Hey, what's up, Brian, Andy? All right, guys, give me some feedback on the audio. I switched to a different mic here. And the screen share looks like it's good. Levels are good. All right, cool. What's going on, Run? So I'm streaming this on a couple places. Obviously, everybody here in the Zoom webinar, you guys can. I've got two chats open, so feel free to interact and throw your questions in there. What I wanted to do today, well, let's just look at some markets. I had a couple of concepts I wanted to share with you guys that will make you some money into next week. And then just talk a little bit about what we do as far as our coaching program and some of the traders, what I work with them on and the successes they're having. We've got guys that are absolutely just crushing it. So, here we are Saturday. Doesn't seem like there's a whole lot of energy. Sometimes we can rip these crypto markets. It tends to really be more Sunday, when Asia kind of gets going, Sunday evening. But how are your guys' trading last week? It's good to see the momentum back. We really had some nice gains that we set up a couple weeks ago in the real-time alerts room. Hey, Laurel, sound is good. All right. I think the biggest thing, guys, is there's definitely been a tone shift as far as I've seen it on order flow. So I had lunch with one of my Forex guys that covers me. They run a firm. They cover a lot of big Forex shops and future shops. And it took me to lunch Friday, but we talking about some of the order flow that they've been seeing on big accounts. I mean, these are blocks of greater than 1,000 BTC, so 1,000 coins or more. And they've had a lot of activity. So there's lots of buyers, there's lots of sellers, but some of these individuals have positions that they were looking for 43,000 coins to get off last week. And they're trying to do it on the over-the-counter market, but it's just good to see that the order flow's back, that energy's back. If you guys remember, these 2 weeks prior, the beginning of April was really slow. So there wasn't a lot of energy. We didn't have a lot of sell signals. There just wasn't a lot of trades to do, other than we were just kind of the two biggest positions that we kept kind of pounding the table on were Salt and Cardano. And this has been a great call. So anything that was below 20 cents, we thought was a great opportunity. We've already had, I'll just show it on the hourly chart. Even had another push to another new high overnight here. Looks like we've got just shy of basically just tested 30 cents. So we've had basically a double off these lows, right? And I still think there's a lot more on this name. So about an 80% rally, 90%, 100% rally in 18 days. We talked a little bit about on the podcast that, longer term, when we talk projections, the overall crypto market's just shy of 400 billion. So it's like three something. So just call it 300 billion for easy math. There's no reason that overall cryptocurrency shouldn't be $1 trillion market cap. So if everything is just jostling for position as far as the top 10 coins, the top 25 coins, everything just kind of stays where it is right now, you just triple all these prices. So if we triple off the lows from 20 cents, I mean, Cardano could easily be 60 cents. I think we're going to probably see new highs into the back half of the year and into next year. So I'm looking for Cardano to go back to 50 cents is kind of where I want to take some more off, and then back at $1, and then we'll see if we can make new highs to like $3. So anyway, it was good trading here. It's actually not a bad spot to maybe add back a little bit. If I had taken some off into 30 cents, I'd probably definitely want to add back here around 26 to 25 cents. I think if we get this hourly is pretty low. The 4 hour, yeah, you guys see how the bands are here? This is the right spot, 25 cents to put some piece back on. What we actually want now is a dip. So the trend changed here. I've been highlighting these lower highs. If you guys can see in the orange right here, I'll pull that back in a second. But the trend changed right in here. And now you guys see how the wave, these bands, we call these are exponential moving average bands, but I call it a wave formation. It shows the wave or the trend. It's a good visual. But we tend to get higher lows when you're in an uptrend at or near the bands right here. So this is the first initial move up. What you want now is a pullback, and that's called what I call the gift zone. So when you have a start of a new move, you want to sit through that first pullback, but you want to add and get more aggressive on it. So any pullback within the range of this zone, this creates what we call a wall. All right. And we kind of like to start getting more aggressive with our size at halfway or lower. So this creates a whole zone here, a buy zone, or what I call the gift zone, because any pullback here is a gift. So most traders are fearful of a pullback, right? As soon as they get into a position, they want it to immediately go in their favor. Well, after a move up here, we were buyers here. All right. After this initial profit take, I want the pullback. I can't get aggressive here. Right? If you missed all of this, you could start a position here, but you need to be light so that you can withstand your pullback and you have the cash to put in this play at the better levels. You guys all see that? Are you guys with me so far? Is this making sense? So the novice or the amateur trader, they buy a level. Typically, they're a little bit late on their timing, and they immediately want the market to go in their favor. They're terrified of being in negative territory. They're terrified of a market pulling back on them. The professional trader wants the pullback. I want to buy lower prices. I can't get aggressive here. I need to be buying more aggressive down here. I need the pullback. and then want to see the secondary move. So I don't know. This market's pretty strong. I mean, a lot of names have done this week and last. So what I am watching as to whether or not we're going to get this pullback is just if the daily if the daily cycle plays out, like you can look on Bitcoin. If our daily cycle plays out, then maybe we will get another nice buying opportunity here. Right? So this is a strong move up, and then notice how the cycle here is all pretty high, right? So the way you play that is if you add, so we were pretty aggressive a couple weeks ago into these lows and right here. So we take a little bit off into the resistance. I've been saying 9,200 was the next pivot, next resistance. Actually failed right in front of that today. But their cycle's high. So if we do cycle back down, then that would be the opportunity for, 3 to 5 day pullback with the cycle. Boom. That's what I want. And I don't get out of all my position here, right? Because if we don't get the pullback and we get through 9,200, people are going to talk about 10,000. It's not really a level. It's just a small minor resistance right here. The big level is up here in front of 12,000. So if we get through 9,200 and we don't get the pullback, I'm just going to be holding. This is going to be a nice run. We still make money. But I actually do want the pullback from here, which is, that's different than most traders. They never want it to go down. They just want it to go straight up. Well, if you're disciplined and you take your profits after a 50% move, or, we've had really big gains, you got to take your profits. So when you start to raise cash and you're starting a new uptrend, you want the pullbacks. You don't want this thing to just take off in a straight line. You're not going to make as much money. All right. So yes, you guys can throw your questions in here. So Andy's asking, how do you play ahead for secondary moves? So a little psychology of trading, you never know, right? You have to embrace the uncertainty of markets. So I try to teach my traders to get away from this having to know attitude. Like, I don't need to know what's going to happen next. I just need to know where my risk is. In other words, I need to know how I'm going to play it. If we rally, I'm still long. If we do cycle lower with the daily, then I took some profit, on this initial move up, because we're high within the cycle, so that if we do get the pullback, I have the opportunity on the downside too. So I mean, I don't know if it's going to pull back or not. It could just absolutely scream. We could go sideways, or we could pull back. But I don't really need to know. I just need to know how I'm going to play it if any of those three scenarios plays out. But the edge or the probability from a time component is that, we can cycle back down here. You guys, there's a reason. For those of you that maybe are kind of new to me or my firm, I guess I could just give you some background. So I was a bond trader for about a decade. I started in the business in the equity and options markets as a trader, and then with Charles Schwab, and then I moved to trade fixed income in 2008, and I ran a couple of rates desks, traded big size. We probably did like 40 to 60 billion a year. So I know what it's like to trade, 100 million, 200 million lots at a time. We traded the cash treasuries. I traded mostly the 10-year and the 30-year, 5-year, 10-year, 30-year. And I had customers. We had a directional model. The same stuff I'm sharing with you today was the same stuff I talked to some of the biggest hedge funds. You guys can look up like Balyasny. I had several traders there that I coached. And then we had I had Goldman Sachs. I covered all the primary dealers, so I talked to all the big guys in the fixed income markets, and they just liked our timing method, and we were very good directional traders. So we would take risks for ourselves, and then we'd also do analysis and work orders for the banks. But anyway, so part of that background is then I left to start Jenkins Risk Management. That's where we do a lot of our educational stuff now. But we're in the process of building out Block Edge Capital. And you'll start to see this kind of migrate all our Jenkins RM stuff to this site. And then part of Block Edge this is our digital asset management firm. So taking advantage of this brand new asset class. That's what we're doing here on Block Edge. And Block Edge, one of our biggest projects is Rhythm, which is a trading platform and a decentralized exchange that we're building out. We have some technology called Bring Your Own Wallet, where we're going to issue the same sell signals that we do here and that we do in our room with our traders. And then, you can literally get it on your phone. You can swipe to participate, and then we can do the trade via the blockchain, put it right to your wallet. So we're really excited about that. This is a big project. It's a big team. If you guys are interested, we haven't done the public ICO yet. We're trying to get it done on the private side, and that's going to be squared away in the next 30, 60 days. But anybody is interested in Rhythm, you can message us. There's our white paper right here, pitch deck. So that's how all this fits in. If you're kind of new, you're like, what do these guys do? Laurel, what cycle is that you're asking about? You said, is that cycle available on TV? On the lower. You mean the cycle on the chart? Is it available on YouTube, you mean? Or I'm not sure what you mean there. This is a stochastic. It's an oscillator. I'm going to show you guys a couple of things on the origins of our model, why we use oscillators. It's an equation of motion. Yeah, that's Trading View. I'm sorry, yeah, TV Trading View. Yeah, this is just a basic oscillator, guys. I don't know why it's not showing the left-hand side here. Might have to reset my chart. It's a 5x3 setting on the slow stochastic. So when you set up your stochastic, I don't know why this isn't showing over here. Usually you can see, oh, there it is. Use a 10 length, works well in crypto, and then 5x3 is the %K and the %D. %K is 5, your %D is 3. That's just how they make the oscillator. And this captures these cycles pretty well. Oh, so what got me on talking about Rhythm and blockchain is when you guys are looking at these markets, you'll constantly hear me saying that there's a nice rhythm here. So everything cycles, right? From your heartbeat to the weather to, atomic, the way atoms move around. Everything's wave formation, vibration, and everything cycles. So it's definitely true in markets. And it's just energy going through the markets. We can see there's a pretty good rhythm here to these ebb and flows. So it's subtle, but you got to pay attention. Most traders have no concept of time. They only care about price, or they only care about valuation. And there's hardly anyone really doing good cyclical analysis work. I mean, if you look at some of the bigger traders back in the day, I mean, Paul Tudor Jones, he was a cycle guy. Jesse Livermore, if you read some of his books, everybody knows Reminiscence of a Stock Operator, but there's another one that's called, I got it right now. Let's see, it's on my phone. It's kind of a basic name. I'll give it to you exactly. But you can read, you know, he was a trader in the early 1900s and the end of the 1800s. And he knew that, you know, he would pick up on cycles. And he talks about it's the time element. Jesse Livermore, How to Trade in Stocks. And it's cool because he even has, they didn't have charts back then, but he would draw these tables out like this. And he would write down the prices, and basically he was charting out the ebb and flow just by paying attention to the prices on these tables. And he has all these in his trading journal in that book. But he talks a lot about there's this time element, and he talks about how it's impossible to time markets on the short term, like day trade, which is interesting because we do that all the time. I mean, my traders know we sell the highs and lows a lot when we day trade. So these same cycles exist on the smaller time frames, but there's just not a lot of, I think that's something that needs to evolve in the industry, is nobody really talks about the time component and the cyclical. Nobody's talking about cyclical analysis on CNBC. Nobody's talking about the cycles. The closest they get to it is talking about a secular slowdown. This is a bull market secular slowdown. None of them even know what that means. But the business cycle is 8.6 years. There's lots of different frequencies, but this is the type of ebb and flow that we care about when we're trading. I mean, this rhythm right here, that got you the low near pi. Pi is, are you guys all familiar with our pi concept? That's a cyclical concept. This pi line right here, that was the exact low in Bitcoin. Right when everybody was getting bearish because we're below the 200, not us. This is exactly where the market should have held in our model. And then you had, look, a nice cycle move up. Cycle peaks, you get a 3 to 5 day pullback, you get another turning point, another double top right with the high of the cycle. You cycle back down, you get another low, 3 to 4 day bounce, back down, another cycle low, and then here we are back on another cycle peak. Yeah, Matt, for sure. So the pi line, this is a really simple discovery that I made. It's not rocket science. I mean, I used to cover guys, literally a rocket scientist that ran Goldman, much smarter than me, made a fortune, went and started his own hedge fund called 9 Alpha. He was literally a rocket scientist from Oxford. And he liked to hear from us, though, just because we were good with our direction and our timing. And so while he's got other complicated relative value types of trades that he would execute in the markets. This pi line is just a cyclical concept that I discovered. So I wanted to see, what other things could we do on the chart that were cyclical other than the oscillators, or you can pull up a data series and draw on the chart the actual longer term cycles and things like that. But I just said, what, just like the global business cycle is 8.6 years. So maybe I'll share a little bit of that with you guys in a second. I got the slides down here. But 8.6 is an interesting frequency, and we get a lot of 8-week counts, 8 to 9 week counts in the market. I can show you on some higher time frames here in BTC. But then sometimes you'll get 8 to 9 day rallies, and then you'll get a turn. But that frequency shows up on the 5-minute chart. Again, the business cycle is 8.6 years. So the last peak in the global business cycle was 2015, September. We're on a down cycle into 2020. And then that'll turn again. We'll have another major turning point in 2020. But within 8.6 years, that actually comes out to 3,144 days. So that's pi times 1,000, basically. So I said, well, why don't we just take pi times 100 and put a 314 period moving average on the chart? And that's what this pi line is. So it gives you a longer average than the 200, but it's not so much about an average on the chart. What's fascinating about this concept is that it's really taking into effect the time component. So yeah, it's an average of the price, but it's also figuring in a certain amount of time that's more important. So a lot of times markets will move away from that average, and then there's an X amount of time that goes by that they cycle back to that average. It's just phenomenal. I can show you examples in other markets. That pi line will work amazing. It works on the 5-minute, it works on the 1 minute. I can show you examples around crazy events that you would never expect something that silly to work, but it does. How about around Brexit? I'll show you. I sold into the pi line on Brexit when everybody else was freaking out, and it was a massive trade for me. Everyone got bullish because we were above the 200. Sorry, that right here. You guys see my cable? This is Great British Pound versus the dollar. So this was Brexit right here when they were voting around that. Huge moves in the pound leading up to that event and after it. Give me a sec. I might have to change my settings and go out a little bit further. Okay, here we go. So this dashed blue line is pi up here. So everybody was chasing all these headlines, whether Brexit, they had the vote, they didn't have the vote. People got bullish though, because the price started to get above the 200 here. And we sold into it. And you had this massive collapse afterwards. So that had nothing to do with having an edge on the news. I don't care about that. All that stuff is smoke and mirrors. When you have this understanding of cycles, it's much more powerful. So we sold into that move. We had a huge drop after that. So it still amazes me when things happen, but like the fact that Bitcoin held the major low right at it, it doesn't surprise us, but it's just an amazing cyclical phenomenon, quite honestly. Yeah, so I guess, Laurel, so 777, I guess, is a second derivative of pi almost. If you times that by 2, you get pretty much close to that. So, that's a good segue. Let me just show you guys some things along these same lines of cycles. So this is, if you guys sign up for my trading course, I boiled down my whole model into 9 hours of on-demand video. It's only $2,000. I used to have these firms pay me $10,000 a month just to have access to what our model was doing. They call me up and say, what's the model doing here? What are you guys trading? So $2,000, you can learn our whole trading philosophy. It covers analysis, execution, risk. There's 3 pillars, but I talk about the origins of the model, and I was always fascinated by the science behind how markets move, and getting into when you start to study math, and you can get into fractals and chaos theory and just the whole design of the universe. Like if you want to look at the coastline, the design of a coastline is not, it's not linear. It's fractal and it's dynamic. So we get into those types of conversations, and there's definitely the same fractal design you'll see in markets. So we identify those patterns, and then you trade those patterns over and over and over again. But everything is wave formation, vibration. And there's a lot of psychology in markets, obviously a lot of emotion. But there's definitely this time piece. So 8.6 years, and there's lots of different derivatives. I get into in our model, you know, all these different events that happen around these big turning points. This is what the frequency looks like. So from the peak, you know, big Japanese real estate bubble in 1989, you had the 87 crash was right on the ECM turning point. You had the Nikkei peak right into the global business cycle in 1998. You can go back and look at all these examples through time. Great Depression started on the downside of this wave after 1929. Major dollar high in 1903. So we get into this stuff. And I guess what I wanted to say, that since you brought that up, Laurel, that, you know, 224 years, you break that down, there was 26 financial panics is basically within that time frame that breaks it out to 8.6 years. You start to see that we have these financial panics about every 8.6 years. Here I'm giving examples of the ECM on the Dow Jones chart back to 1929. But what I wanted to say that, so even the long-term cycles in nature, like the precession of the Earth's axis, the equinox, that's 25,800 years. It's basically 8.6 times 3, which is 25.8. So this just pi is your perfect circle, and it starts to show up in everything. So that's the long way around about our pi line. I guess the other thing I was going to share with you guys on oscillations is sorry, I'm trying to get this. I'll get to some of your guys' questions. Alts play off BTC certainty. Okay. So guys, in physics and thermodynamics, when we study velocity, acceleration, that's what a lot of people don't understand about trading. It's not always just level specific. I mean, I can't just say buy here and give you 2 targets, because you ignore space and time when you just target trade. I think it's one of the worst ways you could trade as a trader, just picking arbitrary targets and hoping the market gets there. Because then you ignore how long it takes for price to get to the target. I mean, you could have, you know, if that's one thing I could share with you guys today, is if you're target trading, I'm going to show you why you should stop. So if you have a market that's turning and then goes bullish, like we said on Cardano, I can't just say, all right, buy here and then take 50 cents as a target and then take $1 as a target and just put your stop in and let it run. I mean, that's such a naive way to trade, because I might have a market that goes vertical. The market might rally and go vertical in literally, let's say, 3 days. And you go right to 48 cents, and then the market doesn't quite hit 50 cents and it collapses because it went vertical. It's hard to sustain a move that goes vertical. So if all you're doing is just setting a target, you're ignoring how fast this climb was and how short a period of time. You're ignoring the acceleration, you're ignoring the velocity. So when markets start to go vertical and have this acceleration, you got to be taking profits into that acceleration. It's the same thing that happened as Bitcoin was going parabolic into 20,000. You got to be acting on that move. All right. And that's different than if a market slowly grinds up towards a target. That's a much more gradual rise. I can ride out my long and just hold it if it's a gradual rise. If something goes vertical, that's different. That's what they call in thermodynamics a phase transition. And a lot of times you're going to have a big reaction back the other way. That's exactly what's happened with Bitcoin. So when we start to study these equations of motion, oscillation is a big one that we use a lot. And the stochastic is a great one for that. So you're going to have different, this is what cycles look like through markets. There's never just one frequency. There's longitudinal waves, there's transverse waves. But the global business cycle is more of a longitudinal wave, like this one right here. It's and then sometimes you have like a lot of a trending markets cycles are more transverse. But anyway, that's what we get. That's the stuff that we cover in our model. I run, did Bitcoin hold pi when it hit 19,000? Good question. So on the upside, it cycled away from our pi line. But typically when a market is moving up, it's going to run into resistance. I don't use the term held, but there are some times where your pi line will be descending. I can show you on like the 4-hour. So if my pi line is like this, typically in a bear market, you'll see price move away from it, come back to it, away from it, come back to it. But since this is a bull market, there is nothing to hold up here. The holding came down here on the daily level. So this is a bull market, so the pi line will always be below the price. Does that make sense? That's another thing, guys. You know, people like all these. I just did an article on the distributed post. I guess I'll just talk about that. If you guys don't know, I think Alex uploaded it. I talked about people calling I don't know if it's there yet. You guys should check this out. Distributed posts. We're aggregating a lot of crypto news here. But I just did an article on that, and I was talking about how everybody was calling this a bear market the last couple of weeks and really the last couple of months. And I just said that's not a very good. Nobody can define why it's a bear market other than price is going down. And so I can tell you specifically that when price is above the pi line, that's indicative of a bull market, a long-term bull market. So Bitcoin never changed its long-term trend, right? It's still above pi. This line is still rising. So we still have a long-term bull market intact. And then I talk about in that article too, like we held the weekly bands exactly where we should have here. So everything is still posturing a long-term uptrend. Yeah, the Fibonacci stuff, that's good. That gets into the mathematics of how everything's designed. You know, Fibonacci for sure is good. What other questions do you guys have? Some of you on YouTube, I don't know if I missed anybody's questions there. Could talk about some other markets here that look good. So a couple coins that started to turn first was EOS. Well, you guys want me to show you the 4 hour? Let me show you. So we've had a long-term bull market in Bitcoin that's still intact, but we definitely rolled over on the intermediate term. So we have a multi-durational model, meaning I have my long-term time frame that we can analyze. You have an intermediate term time frame, and you have a day trade time frame that's the near term or the micro. And when I look at a 4 hour chart, the 4 hour chart will show you the intermediate term. And so here's a great example of our pi line in use again. We held it exactly. I mean, so these are areas, guys, on the chart. I teach my traders not to be level specific. So one of the worst things you can do as a trader is identify like a rising 200. Like I said before, and just because price gets below that number, believe it or not, there's a lot of algorithms, there's a lot of computers, there's a lot of traders that will get bearish just because you're below that line. But we don't trade that way. Just being above or below a line on the chart is very rudimentary. It's silly. What I care about is that the average is rising. That shows me the trend. And so again, we had pi is rising, and you can go through the line. You just need to think of this as an area, like a chain link fence. You can push against the chain link fence. It's still bullish. So we double topped up there in front of 20,000. My traders know that when we break the bands, we tend to get the move back to pi. That's exactly what we got. So there was reasons to play defense when we broke 17,500 right here. We talked about we could maybe cycle back to pi, which would be a crazy quick move. That's exactly what you got. And then you cycled back off of it. But the intermediate term was bullish up until right here. And then that set in motion this 2 to 3 month cycle down on the intermediate term. And you can see how the pi line rolls over. And then it's a matter of cycling away from it, cycling back to it. Moving away from it, back to it, away from it, back to it, away from it, back to it. But the direction of that pi line, that shows you real simply your intermediate term picture, right? So we're still not quite out of the woods here on the intermediate term. I mean, my traders know there's some things here that happen that are bullish now. The fact that we got above the bands right here, this is a real money candle in our model. All this is going this way now. But part of price being above pi, the longer we stay above pi and that starts to turn up, you're going to see your big picture momentum come back. We haven't had that since we broke 14,000, really. So that's starting to change. You can see this is the intermediate term weakness. All right. Now, from a timing perspective, we're starting to cycle back the other way. So I want to see us spend some time above 9,200, and then we can see the momentum come back. Hey, Stan. Okay, Stan's saying spend some time talking about position sizing, and he's absolutely right. Probably one of the biggest things to be a consistent trader is you got to learn how to work your position size. We spent a lot of time in our coaching sessions working on that. So that's a great point. I can share with you guys some couple tidbits on that. Josh, on the RSI, I do have an RSI down here. I don't use it that much just because I don't really need the RSI to tell me that we're oversold here. I can just see it based on what price has been doing. but it still is nice to kind of reference it. So, you know, if you're bearish, if you're in a bearish trend, you obviously want to sell rallies, or you want to sell when the RSI is high, right? So, well, I'll just share with you guys. I made some hedge calls on the short side for our miners, for our subscribers, but right up here, both of these times up here, you had that scenario. You have an RSI that's back in overbought territory. And so we were selling futures here as a hedge, and I covered and got out of all of that down here. So we were shorting, covering, shorting, covering. But when you have a multi-durational model, I can be long. Like I have a bunch of Bitcoin for the long term, but when we're having an intermediate term downtrend, there's opportunities to make money and earn extra cash, that instead of just, that's the problem with HODL, is that you ignore the downturns and you miss on so much opportunities. If all you're doing is buying and holding, you're not trading around your position, there's lots of opportunities to hedge here. And so there's money to be made even in this downturn. And then you turn around and take those dollars and you can invest in other opportunities when the time comes. I should show you what that looks like on the future side. But that's how I'll use the RSI. I just don't necessarily need the RSI to tell me that we're on a bounce. I mean, I could use some other things in our model that we use that's a little bit easier to read than just waiting on an RSI. But I do like the RSI. So here's CBOE Bitcoin futures, and these are sell signals and where we were shorting both times up here in front of 12,000. So you had a lot of traders chasing the market here, but not us. Because if all you're concerned about is price, you see a lot of red here. You miss the rally here. You're waiting. Oh, looks like we're getting above this resistance. This is a big candle. Okay, now I'm long. From a timing perspective, you absolutely bought the absolute high of that move. So we were buying here, and we were coming out here. And then we were actually shorting here because, again, the intermediate term, we had a pie line that was right there. We knew we were high within the cycle. It's just that it changes the whole game when you start trading with cycles. Your timing becomes so much better, and you're not, a lot of times, if you're not using time, you're going to be doing actions the complete opposite in time of what you should be doing. You can see it a little bit better on the 4-hour chart here. So again, we're going right back to pie. Boom, that's a sell in our model. That was a really nice trade. Take you profit, resold the bounce, covered into these lows here, resold the bounce, and you can see these are all my covers down in this area. All right, and then I did resell a couple times based on the cycle, but we couldn't break down. And so once we got this real money candle, I took off all my short that we were short from up in these levels. So now I took off. Now, since this happened, there's no reason for me to be short. I may go contrarian short again in front of 12,000 just to do some hedging versus what we're mining. And we did get pretty aggressive on a lot of other names down here like Cardano and Salt and Litecoin. So we have some bigger positions now. So if we do get the move back to 12, it does make sense to hedge a little bit. We do some hedging for miners too. So, I don't know if you guys know, but if you're mining Bitcoin, you can lock in. If we get back to prices like 11,000 to 12,000, we'll be hedging out 2-3 months. So I can lock in a sales price for the next 3 months, and I know whatever coin I mine, I can sell it at those levels, which is really important. I mean, could you imagine? A lot of people weren't hedging yet when futures first came out, but if you could have locked in, BTC at 20,000 and you could sell forward 4 months, well, you had the right to sell Bitcoin at 20,000, and this whole downtrend. If you're mining now, you can only get 8,000 for your coin, which is still really profitable. But that's the power of futures. So if you're mining Bitcoin, you have an advantage because you can sell forward. You can lock in better prices in the futures markets. So some questions on Elliott Wave. I would probably say it is probably wrong. I mean, Elliott Wave is good, but Elliott Wave just basically will show you that a trend is getting overdone. And again, the thing with Elliott Wave is it's so specific on trying to hit targets, and it ignores that market can be changing, time change, how fast something gets to a certain level. So the problem with Elliott Wave is you're just picking these arbitrary points, and you're ignoring time. So I mean, yeah, if we didn't hold these lows at 6,000, then I would say it makes sense that if you draw a nice Elliott Wave, that maybe you can retest 4,500 area. But I could pick other areas too. You can randomly pick 3,000. I can find a level at 2,500. But all that stuff doesn't matter. We tend to do if-then analysis. So just picking a point for whatever reason, you can always do that. But to me, 4,500 doesn't matter. I don't care about it until 6,000 breaks. That's the right attitude. Is if 6,000 breaks, then this can happen. Of course, BTC can go back to the highs, but you've got to get me through 12,000 first. Then talk to me about 20,000 or 30,000. Same thing on the downside. It doesn't do any good to play for 4,500 when you haven't even broken 6,000. Like, why wouldn't you be a buyer at 6,000 right at our pie line? Just because Elliott Wave has another target out in the distance. Until we break this low, you want to be a buyer. This is exactly the area that should hold longer term. It's the pie line. It's the bands on the weekly level. That tends to where you get higher lows. So, okay, sure. If we close below 6,000, that was our call. Then you got to really play defense. Like, I was probably going to get completely flat, because then we'd be starting a long-term bear market. We'd have lower lows for the first time and really ever. But the market didn't break it. So that's just, to me, it's not helpful. These guys making calls at 3,000 and 2,500. You haven't even broken 6. Don't make that call until 6 breaks. You want to be a buyer at 6, and that's been the right way to play it both times. That's if-then analysis. If this happens in the market, do this. If this breaks, this is how you play it. If this happens, then this is possible. That's if-then analysis. I see it on the upside too. People are reiterating my 28,000 forecast. Okay, great. That doesn't help me with anything. It doesn't help me with buying the lows a couple of weeks ago. It doesn't help me with taking profit into 9,200. Just making a long-term call doesn't help you with buying here, taking off, hedging. It doesn't help with the timing. You got to use an if-then approach. Yeah, we talked about Cardano a little bit. Belgi, I don't know if you're just joining us. That was one we went on. We checked out, we were talking about earlier. we've been buying. I'll just show you guys. I said earlier that I would talk to you about just a simple strategy that'll help you. So when you start to really identify and learn how to recognize the trend, you want to follow the lower highs. So we were following, you see these little orange marks we were making? We've been following these lower highs on a systematic measure and mapping process this whole way down. And that started to change last week. We finally made a higher high. So this creates what we call a swing line. And so that's always a great way to trade the alts, guys, is you identify those lower highs, and when that finally changes, oftentimes you get a big move back the other way. So I think Cardano is poised to go back to 50 cents, 50, 60 cents easily. I mean, we did a lot of work right here in this pennant. So that was my call at 15 cents, that this was a great opportunity. I mean, this was basically a 4 or 5 bagger off the lows. And then longer term, I think we can make new highs, but that's not really helpful. I mean, we might hit $3 3 years from now, but you can have a lot of these bear moves like this. You can have a lot of these moves, guys, that a lot of traders won't be able to sit through before you hit $3. So I don't tend to make those big calls like that. It's just not helpful. But I think from here, we took a lot of profit last week after buying the lows. I was really aggressive about making that one of our best long ideas. So we took some profit this week. I mean, you had a 40, 50, basically 100% move up. So I want to see a pullback now with the cycle, is what we talked about. So I'm not afraid of a pullback. I actually want a pullback. So I'm hoping that we took some profit, that it'll come back down. If it doesn't come back down, I'm still core long. I'm just going to be holding it basically for forever. That's my mindset. Because I'm not going to get rid of my core position on Cardano for a very long time. Yeah. I'm not really familiar with Prector. Sometimes these guys make big long-term calls, and especially on stocks. This has been one of the most hated rallies in a long time in the stock market. And in our model, we've been bullish, and they're just now starting to be a lot more cautious. And I'll start to get a little bit bearish longer term if we start to break some levels. But it's the same thing. Just making a call that we're going to have another recession and stock market's going to crash. That's not the if-then analysis. The market's been making higher lows since 2009. Really, at a couple times where growth slowed in 2015, 2011. But until the market, again, if the market takes out the higher lows on the weekly level, then we can start to get bearish. There's no reason to make a grandiose call and you just ignore what is happening. It's about trading what is, not what you think should happen. Like right now, what is happening is the cycle's high. What is happening is we had 100% move off the lows. So you take profits. Can it dip? Sure. Can it go in a straight line higher? Anything's possible. If it dips, I'm a buyer back here, 25 cents, 20 cents. That's what I'd like to see happen. If it keeps going straight up, that's fine too. I'm gonna make money. And it's like that for a lot of the markets, guys. We kind of went over that. If you want some other alts, I mean, we added the Dash. We added to Dash at the same time, a couple times last week. It's finally breaking that same pattern of lower highs. So the intermediate term's back up. You can see the cycle's high. Same thing on Monero. I try to track this on a couple different exchanges, but we had 2 ads and I took profit yesterday into 250. Same thing. The cycle's high. I'd like a pullback. You know, this is setting up for another rally, really. Our really low ad on XMO is back on the 12th. So we're up 40% from there. You just got to take some profits. You always want to talk about the majors. Ethereum. I mean, I cut some risk here. I don't want to get into that. That's a whole nother lesson. I just don't have the time for it. But then I added back onto Ethereum here. Added again. Same thing. Cycle's high. We're back at the 200 here on the underside of the 200. So there is some resistance. This is a good spot to take some off. And then we'll be a buyer on the next dip. Litecoin finally got above 130. So we were buying in front of Pi down here and taking some profits into that 135 area. It broke through that. It's contending with the bands in the 200. So these are all areas these are profit taking opportunities in here. If you're just now starting your long, you should probably sign up for our real-time alerts because we were long 2 weeks before that. Now you want to be coming out of some. But the market looks good. I mean, we're pretty bullish. Bitcoin Cash has had a big move. EOS was one of the first ones to move up. And then Neo's contending with the bands. You're high within the cycle. Binance Coin was one of the first ones to move before the rally on BTC. You can see here, guys, on EOS got much different looking chart. You got above the bands in the middle of April when a lot of the market was still doing this. So EOS turned up first, and we had some buy signals in here. We've been trading this around. EOS looks good. It was the same. Oh, sorry, guys. That was BNB. That was Binance Coin. Same thing, but EOS did the same thing. This is versus BTC, but you can see that it got above the bands here. So we were buying here. You had a nice run, still long. But I don't want to keep you guys too much here on a Saturday. I just wanted to, hopefully you kind of got some concepts there with the Pi line. I want to show you guys how to get involved with us. And we kind of wanted to make this a special webinar because we really haven't promoted our trading services. Most of you, I think, came in via the podcast. So I'm going to show you guys how you can, if you want to learn the model, if you're interested in the coaching I'm talking about, our real-time alerts, you can go to, I don't know, Alec, if we have a certain link, but jenkinsrm.com. Maybe Alec can post another link in the chat, but this is our education here. So I think we have a discount for you guys that are on the webinar today. Anybody signs up, it's 10% off. This is our real-time alert. So this is where we're signaling, our buys on Salt and Cardano and what I just showed on EOS and any of our trades, guys, our day trade stuff when we're hedging futures, our long-term ideas. I post videos in here and updates on what I'm seeing, what the markets are doing. It's a great team environment too. Everybody's contributing. We have a lot of people that are really up on the tech side and mining, talking about masternodes. And then down here you have the trading course. So that's a little bit what I was showing. I'm sorry, I'm on the wrong screen, huh? So you guys have been Small caps. So I was trying to go through the coinage here with you. But this is what I was talking about. Here's the buy on the last buy signal we had in EOS. All this stuff is going on in our live room. Yeah, I think you guys get that. So here's the trading course. For those of you in Zoom, this is kind of what we were talking about. It's going through the origins of our model. So again, I'm covering 10 years of me trading professionally. So all the mistakes and all the dead ends that I went down, you can stand on my shoulders. And that's the thing with trading, guys. If you're new to trading, you can go down all the dead ends on your own. But the unfortunate part about this industry is that when you're learning, it costs you money, because when you make mistakes trading, it obviously costs you money. So I would encourage everybody to just, if you want a good edge, you want to really learn how to view the markets the right way from a trend perspective, you start to understand cycles. This is a really good option. It's only $2,000. I mean, I've paid for courses when I wanted to learn options. That was $5,000. When I got licensed and had to study to get my Series 7, I mean, that costs you several thousands of dollars. When I learned to trade Forex, I spent $12,000 in a weekend program. Doesn't teach you nearly as what I put together for just this low price here. So I would just encourage you guys to make that investment in yourself. It's something you can have for the rest of your life. Whether you want to trade stocks, gold, there's always going to be different opportunities in different markets. And you can take this model and you can apply it to anything in any time frame. So that's the power behind that. Andy, on the signals, no, you don't have to be available every minute, but we use River. So what's nice about this app, soon we'll have a rhythm platform that could be on your phone. It can just be done automatically. But right now, everything on the crypto team, this is our private room, so you can get an alert on your phone. But I mean, they're throughout the day. We have a lot of people that are have full-time jobs, and they swing trade around this stuff when they can. So you're gonna get long-term signals in there, but then you're also gonna get there's plenty of opportunity for you to trade it however it kind of fits into your schedule. And then guys, the coaching. So this is where I really work with traders that want to go to the next level. And this is where you're going to see just amazing growth. So I've had a couple of traders go through this trading. They've quit their jobs. They trade full time now. Some of them making six figures. I've taught several traders fixed income. I've taken traders that didn't know the bond market at all, completely new to trading, making high six figures now. I taught them how to trade. All that same stuff is here. But to really go to that next level is you got to get inside trades together. You got to feel what it feels like to day trade and have to flip and go, change your position. If you're long, flip and go short. Let me just share some of the success. So a couple of my traders, when they do the coaching is we trade live, couple hours, Tuesdays and Thursdays. We're trading a lot of Forex. We're trading a lot of crypto. But so this is one of my traders, the first day that he was on the coaching side, he was amazed that this is his consistency once he started to turn the model on and really understand it. And so he's a pretty big trader, but this was just, he was new to the model, so he wanted to trade small. And I don't care about the size of the wins. This is about the consistency. So he only had one losing trade here. And this is basically over 4 days. So I think I got, let's see. This is one of my traders is trading futures. He has been crushing it. This was his March, 9 grand, 8,500. He's just thanking me for what the model's done. I think he did like 30 grand. There's another month doing 10. We have just lots of testimonials like this, guys. You know, people coming in crypto, they're new to it, and they got kind of upside down, and the models just kind of turned around what they've been able to do. You know, this is one of our newer traders. He's improved his trading tenfold, which is just amazing. And this is in a down market too. This is my Forex traders. This is one of the days he had 8,200. Really proud of him. My first full week trading JRM intraday only. I traded about 1/10 my normal size, but the consistency is amazing. He's only had one tiny loser all week. That's ridiculous. So this is, you know, the results that we get. You got to keep score. And that's why we do what we do. But really, guys, the coaching is where you're just going to really explode as a trader. There's so much more we can work on when you're trading live with me. Anyway, that's enough of that. So you guys have any other questions? I want to really encourage you guys to take action. You know, I mean, it just always amazes me that people will, what they spend their money on. But if you can invest in yourself and you can learn this model, I mean, I've been passionate about teaching traders, and in these crypto markets, you employ this method and you go out and you get coached and you get trained. I mean, I had one trader who's paid 100 grand off of his student loans just from what he's learned in the model in crypto. So guys, I want you to act though, okay? No, especially in markets, you don't get rewarded for not being confident and acting. So if this gets you excited, if you want to do this stuff, if you guys sign up this weekend, how about this? Anybody that does the live webinar, the coaching, all right, if you sign up this weekend, I'm going to give you an extra 4 weeks that we'll trade together, and I'll mentor you. So it's 8 weeks. I'll give you another whole month. So it's an entire quarter that we can trade together. And if crypto is really taking off, I mean, there's going to be a lot of moves. There's going to be a lot of moves in the dollar here pretty soon too. So sign up. And then what I need you to do is make sure that you come into the room and you chat with myself or read us and just let us know that you signed up this weekend. And, you know, for rewarding you for taking action, then we'll make sure that we mark down that you got an extra 4 weeks on that, on the coaching side. Gazillion, I think there's a link right there that will knock down the 10%. If you can't quite get that, you can always come up here into our chat room. Most of y'all should be in here anyway. This is free. You come to the chat room. You can always message me, and I'll make sure you get taken care of on the getting signed up on the discount. Good. Sorry, Matt. Yeah, I didn't explain that. So, guys, on the value you get with the coaching is you get the real-time alerts. So you're getting all the signals, and you're in the private team. You're on the crypto team. But then you're also getting, you get the course. So you get the full course as part of the coaching, because I want you to understand the model. You have to go through the model, because otherwise you'd be lost when we're coaching. You won't know anything what I'm teaching in the live room. So yeah, the live room is a great value. It's, you know, only 3,500. Again, guys, you get the whole course. You get the room. You don't have to pay for the room if you sign up for the coaching. it's a great value. I mean, I knew when I paid 12 grand for Forex to learn the Forex markets, I knew that even if I just got one or two concepts out of that training, it would be worth it, because over a career of trading in the markets, and I took a couple of those Forex concepts that I learned and I brought it into the fixed income markets. And I mean, it paid off. I mean, hundreds of thousands of dollars and millions of dollars for me, my desk, all just from just a couple ideas and tactics I learned in that. And so that's how I always looked at it. You got to think about the return on your investment, and not, you got to have that. We don't have a broke mentality about this stuff. But yeah, that's a good deal, guys. So yeah, there are lots of people that have day jobs, and this is only one specific time for the live room, but we do record all the sessions. So I realize that some people are all over the world. I don't really have the time to do evening coaching sessions, but we record all of this. So that's why, like, even on the trading course, if you just buy that, there's 300 hours of all of my live trading that you can, so you can watch a past session and learn from it. But yeah, we have lots of traders that have full-time jobs that before I was free and I traded directionally, I do this full time. Everything I've made money-wise is all from the markets, just trading directionally the last 10 years. But before that, I would get up and trade London. So we have some people that trade London for a couple hours before they go to work. A lot of people in the US do that. But I mean, you can swing trade, you can take longer term positions. The model is going to help you tremendously on that. Okay. All right, guys. Well, hey, thanks for spending some time. I hope I brought some, if nothing else, a couple concepts and some things to your trading week next week. You can make some money. But I'm excited. I really like what I see in the markets. I'm really happy with the results that everybody's getting on the team, and I just want to grow it. So I look forward to seeing, a bunch more of you on the coaching and signing up to learn the model, and we'll get after it on Monday. And hope you guys are enjoying the playoffs too. My Avalanche won, so I'm pretty excited. Big game Sunday. So I'll be hitting you guys up in the chat about it. You guys enjoy the rest of your weekend. All right, Steve. Sharks. All right. All right. All right. You guys are welcome. You guys have a good one. I'll talk to you in the chat.